everyone, this is Corey with Sims Investment Management. This is another monthly market update. So September 2022 and in August we saw the market rally, continue to rally off of the June low. Until the last few weeks we started to pull back again. We did have an official 50% retracement of the pullback that we've had. So if you look at from January to when the bottom of the market in June 14th, and then from the bottom on June 14th, we retraced about 50% of that move. Why that's relevant or important is not saying that June 14th is 100% the bottom of this market pullback, but history is on our side. When we've had a 50% retracement of a pullback, we've never in the past gone on to make new lower lows before. So not saying that it couldn't happen, but again, history is on our side. I think it's important to put into perspective that we're 8 to 10 months into this market correction or bear market. To put that into perspective, the Great Recession from peak to trough was about 18 months, and that was the worst pullback that we had since the Great Depression. So it feels kind of like we're muddling through. The market's looking for some clarity. Are we going to get some resolution on Russia and Ukraine? Has inflation fully peaked? What's going to happen in November with the midterm elections? Some of the policy decisions that are coming out, and are they going to actually help inflation or not? But I think what's really important to put into perspective is all the predictions that come out. Nobody can predict the future, and we've talked about that. So if we look at what's happened the past 2 or 3 years, no one actually predicted that COVID was going to happen. Nobody could have predicted what our response to COVID was going to be and essentially shutting down the world economy. No one could have predicted the amount of money that was going to be flooded into the system or the multiple rounds of PPP. Nobody could have predicted what was going to happen with the election or what happened on January 6th or the fact that we'd still be talking about it over 2 years later. So all these predictions and the talking pundits, it really just kind of drives people crazy. It's just noise. It doesn't really have any relevance on what the long-term direction of the stock market is going to be, because again, the market is made up of companies with real earnings. And so to put that into perspective, one of our newsletters that we subscribe to did a really good job of outlining, again, if you think about the S&P 500, which are the 500 best companies in the country, largest companies in the country, arguably managed by the smartest and brightest people in the world that are the best capitalized in the most friendly, business-friendly country in the world. Okay, the S&P 500, since 1970, the earnings of those 500 companies have increased about 40 times. And since 1970, the stock market, the earnings have gone up 40 times, and roughly the S&P 500 in value has gone up 40 times. If we look in the past 30 years, since 1992, earnings on the S&P 500 companies have gone up about 10 times. The value of the S&P 500 has gone up roughly 10 times. So you could argue that we're roughly fairly valued on the market right now, but looking forward the next 3, 5, 10 years, where do we think earnings will grow to? And that should point us in the direction of where we think the market should go to. Again, I think too many people lose track of the fact that the stock market is crazy from day in to day out, and you will go crazy if you try and watch your account day in and day out, or worse, multiple times a day. But if we worry about the fundamentals of the underlying companies that have employees just like you that go to work, try and do their job, try and innovate and grow their companies and do a good job, where do we think they'll be in the next 3, 5, and 10 years? And that is why we keep an optimistic view of what the U.S. economy will look like, and we will have many future temporary declines in the stock market, but the stock market tends to overreact, and we are more concerned with the permanent uptrend of how companies will grow. There's a couple really good charts in this month's newsletter, in addition to the little blurb of why the anxiety of the unknown is really what causes us to have some discomfort when seeing our balances in our accounts move up and down. So I hope you check those out. If you have any questions about this or think this could be helpful to send along to someone, please feel free. Reach out to us. We're continuing to meet with clients and review meetings. And if you have questions, we're here. But hope everyone had a wonderful Labor Day, has a great finish to their summer, enjoys football season kicking off, a little Who Day action this weekend, and we will see you next week. Thanks.